Good afternoon, everyone. You're all very welcome to Thursday's US session market open. So of course today we'll be factoring back in along with the ECB press conference and interest rate meeting, which is of course has taken place today, and some of the major US trading data events, particularly in the last hour or so, as we have seen the latest GDP figures being released in the US. So the narrative of today is obviously seeing the growth expectations coming in greatly above expectation. And I think the key topic is today is how do forecasters, analysts get these things so wrong unless they are intentionally pricing them weaker for obviously those upside surprises. So I suppose first of all, let's take a look at the economic calendar today. You will see first and foremost, obviously we've had the ECB today. No changes, obviously, as expected. We have seen a little bit of a run lower in the euro pairs today, with obviously the dollar picking up strength. So there's been kind of two narratives today. You've got the ECB in Europe on one side, US data on the other side. So we're obviously looking at the two contrarian viewpoints and realistically understanding which assets to trade for which circumstance. So as I said, with the ECB running lower, running weaker, that has definitely fueled that little bit of a correction in the euro dollar, which again is fed through a little bit back of support into the DXY. So from that narrative, from that situation alone, we have seen pressure in the euro this morning, only marginal. We've gone from kind of 109 this morning and back into this 108.60 today. So declines have been fairly marginal in that regard. Obviously, with that little bit of a pullback underneath in the euro, we have seen that little bit of dollar strength short term, with the Dixie picking up strength above 103 again, back into this 103.40, which is obviously the highs from yesterday. So that's where we're looking at in the DXY story, the euro story, the FX story broadly. And then of course you have the other side of things. Of course you have the growth expectations really beating things on the upside. Now, I suppose to kind of clarify that, obviously we'll be looking at the charts now. You'll see obviously GDP coming in 2% was the forecast or consensus, 3.3% was the real figure, the actual figure that was released against the previous of 4.9. So although we are 1.6% in the previous, we are 1.3 above consensus. So again, you'd really want to wonder, where is this 2% expectation come from today? Because I think the forecasters have had their heads in the clouds today. So of course, as a result, what has that meant for markets? Well, the analysts are pricing in a 2% figure. 3.3 comes out. Naturally enough, stock markets rally. That has been the team of the week. In fact, it's been the team of the year, as we've seen all major US indices get to new all-time highs. And the prime example of that today is S&P, NAS, and Dow Jones. You can see it today. This was the clustered consolidationary zone where we held into 130. And of course, in the last 53 minutes or so, we have seen that fairly sizable rally. Now, you're only talking about 30 points, so it's not a massive rally by all intensive purposes. But I think the key kind of theme today is, can stock markets continue that impetus, right? So we've had helpful data. We are at all-time highs or holding all-time highs. We're a little under highs of the week following the highs that was made yesterday and that little bit of a correction last night. But of course, the theme of the day is, can we see those upside gains continue, or do we see a little bit of a leveling out? Now, I think that would be the ultimate kind of rug pull, would be to see obviously indices rally 1:30 into 3 o'clock and beyond 2:30 US Open, and then maybe start to fade again, creating that top of the week and then starting to level out in the order book. But so far, so good. US indices buyers are still firmly in control. We are well above our value areas in the day. And of course, we actually are well above where we really started at the beginning of the week, because this is kind of where we started at the beginning of the week. We closed last Friday. Where did we close? Roughly speaking, around about here, around 48.40. So we are about 1% up on the week. Obviously, that kind of massive impetus Wednesday morning, Tuesday night, Wednesday, followed by that pullback correction yesterday. So we want to really see, does that impetus today continue? And if so, we are looking for further all-time highs being created in the US stock markets across the board. So it doesn't matter whether it's S&Ps, NASDAQ, the tech play, or the Dow Jones. And you can see that rotational play across the board, as always. Aggressive spike in the NAS, pullback, aggressive rally today in the NASDAQ as we head back up into those levels, those upper regions. So 17.6 is where we're at in the NAS. 4,900 is that really contentious area on the S&Ps. I think on futures, I think we're about 49.30, 49.40. Obviously for highs. And we're really just looking to see, does that momentum sustain? Does that initial impetus over the last hour or so sustain? We are seeing a little bit of profit taking into the open, but of course we want to see, is there a follow through? Because otherwise what we're going to see is those Grand Duke York markets where we tend to see those apex like structures. We break up, initial movements, profit taking, and then we filter all the way back down. Of course, we had it to a lesser degree yesterday, grind up Tuesday, grind up Wednesday, break the point of control yesterday, and try and migrate back down to the value area where we'd held for the last 48 hours down here. So as we know, markets are always going to be cyclical. It's not always going to be sustained, and there is going to be profit taking coming in, particularly when we are at such extended levels. And of course, when you look at the extended levels, go back out to the higher time frame, you can really start to put some perspective on things of how overextended things have been, not just over the last number of months, where we've gone on this massive rally, but even more so specifically over the last week, 2 weeks, where we've gone from this 4,700 all the way up to 49 with any sort of little correction. So that is always the fear. We are fairly well extended. Do we start to see profit taking, or do we start to see a little bit of relief? And of course, today we are starting to see markets top out up in this region. So wouldn't be surprised if we actually did start to see profit taking coming in, leveling out in the book, bit of profit taking, and we actually started to see a little bit of a correction. So always be cautious of that. And always be cautious of not buying highs when they are massively overextended, and just waiting for that little bit of clarity to kind of reinforce the trend, and being kind of clarified in that regard. So S&Ps, NAS, Dow Jones across the board have just been incredibly bullish this week, and I think that's obviously been the continued narrative of the week, of the day. The Dow Jones less so today. We've obviously seen that rally from last Friday. This week, the Dow Jones very consolidated. So the S&P and NAS has continued to make successive highs Tuesday, Wednesday. Dow Jones obviously less so. Very range bound, very consolidated for the last 4 days. In fact, you look at the last 3-4 days, fairly tight range overall. Point of control here, slightly above, slightly beneath again. A little bit of a sell-off this morning, a little bit of a rally back up. We're still holding this area here. So that's why that 37,900, 38,000 level is going to be critical this week to see, well, actually, do we break through and do we continue progressing to the upside? Do we see this trend continue? Or do we start to see a little bit of profit taking coming through? So that's why, although the indices are kind of correlated to a degree, you just have to be cautious of the fact that, well, they won't always move exactly the way you think all of the time. And that will be just something to kind of be cautious of or have in the back of your mind. So that's kind of where we are in the stock markets element of things. If we look at point of control today, we have these red lines. So this is our point of control today. Obviously, sell off, price actions rallied back into it. We really want to see, can the price action break out through it? Because as I said, Dow Jones this week has been fairly consolidated. S&Ps and NAS, meanwhile, obviously been much more bullish in that regard. We had this consolidation last night after a bit of a pullback in the S&Ps and the NAS. Later on, we saw stabilization this morning. And of course, that data has really helped those two indices progress to the upside. So we're really looking now up here at 17,600 and underneath 4,900. Does that buying impetus really continue? Or are we repeating kind of something similar to what's happening in Dow Jones with those kind of moderate market corrections? And more kind of stabilized price action rather than that really aggressive bullish moving momentum that's visible at the moment. Other than that, in Europe, we are obviously seeing Euro stocks and DAX continue to kind of reign supreme. So this 4,500 level, we've seen that aggressive breakthrough on Wednesday, as we talked about with the European data. Overall, broadly speaking, data this week in Europe has been pretty good. Still seeing that obviously today with that follow through. So that weaker euro play today has allowed Euro stocks to hold a lot of its bid. Obviously, weaker currency, stronger indices. So there's the rotational correlation playing out there in Europe. And again, similar with the DAX as well, which is holding up relatively well overall. So really, that's going to be another theme for the week, given we've obviously had ECB today and European data this week. Does the European indices hold up at these levels, or do we start to see a secondary correction adjacent to what we had through December, right? Very, very sharp correction into the middle of January. That buying impetus coming back in again, retesting or re-challenging those highs. 4,600 in Euro stocks, very aggressive move, particularly in the last week or so. This week, following up. And again, similar scenario in the DAX. Profit taking coming in, impetus is leading us back into that 16,917,000 level again. So we're really looking to see how does that play out. Obviously today, into the weekly close, getting a little affirmation, and then, of course, applying a kind of a sort of a set logic into next week, which, of course, we have month end. We've got more central bank meetings with obviously the Fed coming up, Bank of England coming up, more data points. Obviously, given that CPI has been released, GDP has been released, the Fed know exactly what to look out for next week. And I suppose that's going to be key for rhetoric into month end, of course, next week, and of course, the new month ahead in February. So that's kind of where we are broadly. As I said, indices holding up 4,900 key area to watch out for on the NAS, 1600, sorry, 17.6 on the NAS, 4,900 in the S&Ps. Look out for that in the first 10, 15 minutes. Are we kind of breaking through? Are we taking out those levels? Are we continuing that momentum, or are we starting to fade already? We're starting to see a little bit of selling coming through in the first minute or so. But again, just be kind of cautious and conscious of that, because of course, would not be surprised if we actually saw the S&Ps and NAS break back down into these value areas where we broke up from this morning. And just being kind of cautious of that as well. All right. Other than that, as we said, not really too much else to say. Just being, of course, conscious of the risk management element of things. Not being too aggressive in any regard, just being kind of safe with your position sizing, because of course there has been a lot of volatility this week. And then just watching those rotational plays. So obviously you've got the DXY, the FX story today with the dollar holding up a lot of strength. And actually be cautious of the dollar story, because of course, if we do start to see those indices rotate into a little bit of weakness, a little bit of profit taking, followed up move in the last hour, then that's probably going to add a little bit more resilience into that dollar. We saw the dollar very, very weak yesterday, rotational play, back into a little bit of strength today as euro has been lower. Cable, which we'll look at now in a second, has been lower. So, of course, that's obviously something to look out for. So, cable, as I said, approaching 127. So, that's going to be an anchor point this week to see, can we break back under 127, leads us back to 126. Okay. Euro dollar, very, very similar. 108.50s, we're trading underneath. Mentioned it on Tuesday, potential for coming down here, but we had these massive spikes this week. So just be cautious of that. All right. Other than that, really, if we look at VIX volatility, the treasury yields is something we obviously look at quite a lot recently. VIX volatility has obviously been selling off this week as indices has continued to push higher. A little bit of a spike yesterday in volatility. We're looking to see how does this play out. Of course, back above 13.5 again is probably going to give us another little spike of vol. But watching that closely. And then from a treasury yield perspective, we're still holding out under 4.2%, of which we talked about yesterday. So that's obviously a short-term key area of interest from sentiment, cyclical and dynamics, and also from a price action perspective as well. All right. And then lastly, but not least, in gold, very, very choppy. Prime example as to why I don't trade it. Massive wicks, both sides of the range. So this was our range all day. You'll see it on the 30-minute charts. Nice consolidated tight range. Wick down, wick higher, take liquidity both sides. A complete and utter mess if you're trying to trade that, because of course, if you're selling, you're taking out on the rally. And if you're buying, you're taking out on this massive wick down. So either way, you've pretty much been taken out of the markets unless you've been very, very lucky with your timing. And of course, we're actually coming back down into this range again. So gold at this moment in time is, in my opinion, staying well enough away from it. So that's really kind of where we are. As I said, short-term perspective, evaluating that is just going to be key today. How does market dynamics react? Do we get another revision of point of controls? So 48.75, around about 48.80. If we look at point of controls here, point of control is coming in at 48.72. So just keep an eye on that 70-75 region today to see, do we actually revisit it, or does the buyers remain in control? And of course, from the NAS perspective, very, very quickly, we can look at across on this on the platform. Again, similar scenario, 17.5, nice psychological level. Up here is where we're at, 17.6s. So obviously any deviation, grand old York markets, as Neil likes to say, those apex-like formations brings us back into that point of control level. And that's really kind of worth looking out for today. How do we react at these levels? 17.6, break of highs, taking that out, or back to those liquidity levels on the day. All right. So that's pretty much it, everyone. As always, trade safe and be cautious. Give that markets. I think that first half an hour, I think, is probably no harm, particularly just to let the markets settle and digest those moves in the last hour or so. And then you can maybe start to get a bias by 3 o'clock, which way we're going to be heading for the rest of the trading session. All right. As always, everyone, have a great week. Trade safe. We'll see you all next time.